Traders, this is Christian Farmer, Starbucks Trade Group, and this is your end of day market recap for Thursday, February 26th. First disclaimer in front of you, everything that we're going through is for information purposes only. In this video, everything that we're going through is for education purposes only. So let's start with, we'll kind of review the day and some of the events, but I think today was more or less about two or three stories. I don't know, maybe four if you really want to add another one in there, or market moves. Number one, I think that the possibility of some conflict with Iran is definitely one of the situations. And coming into today, one of the things that I heard was that the beginning of the day they were saying that that there wasn't much progress between the two, and we know kind of the situation with that is that there's a lot of U.S. military forces over there, and they're basically just sitting there, and whether or not there's going to be some type of a deal or some type of progress, and this is going to weigh on markets. So they kind of came away with the meeting, them leaving and saying that U.S. and Iran continue to talks over next week. Hence, a lot of the areas of the market bounce pretty nicely on that. That's was basically the one concern. And the couple of things that I read from this earlier, which I'm a little bit pessimistic about this, because they said this morning that, see if I can. I'm trying to find the headline. U.S. asks Iran to deliver remaining enriched uranium to the U.S. U.S. seeks Iran to destroy its three main nuclear sites. Now, what do you think the probability that they're going to do such a thing? I don't know. I don't think it's a high probability. There was a statement earlier that says Iran won't allow enriched uranium to leave the country. That's something came from that headline came from the Press TV, which I'm not sure who that is, but that's what I saw earlier today. So it seems like now you kind of know a little bit about where they're negotiating, and until we had that headline that hit later in the day that said U.S. and Iran continue to talk to next week, and that talks are going well. Reminds me so much of the trade talks with U.S. and China a couple of years ago. Trade talks are going well. Um, nuclear talks going well, and they're gonna go into next week. But I don't know. I think that at some point something's going to have to give with that. And for now, I think that's why the market is kind of trading in this sideways. One of the reasons why the market's trading in the sideways range. And I'll get to the charts in the S&P in just a second. But the other big story was Nvidia, which as I was doing the video last night, Nvidia was up a couple percent, and then it just kept on kind of coming in. As by the time I finished the video, Nvidia was almost unched. So again, one of those pops and drops. The stock closed down about 5.5%. I think that there's a number of reasons for that. I know that I see these what I consider as kind of foolish polls that folks are doing on social media, where they're betting whether or not Nvidia is going to beat earnings or not. Well, that's not really the case. That has no juncture about whether the stock goes up or down. It really depends on what they say on the call, what the guidance is, and also how crowded the stock is. And I think that's part of the problem is Nvidia is a bit crowded. There's already a lot of funds that are invested in this name, and that's kind of why it's just been sideways. Now, I thought yesterday's move was a bit fishy. I was doubting it yesterday. I didn't like how a lot of things were rallying into the report. It felt like a little either FOMO or short covering to me. And I think I was right with that assessment. I did put on a small earnings trade just in case I was wrong, but I just kind of expected more of what we saw for today. I just think that we didn't really hear anything that was that new, I think, in the earnings call. So hence that's what the reaction is, right? A little bit of a sell the news. And like I said, it did kind of pop a little bit, a little bit of the buy the rumor, sell the news type of trade into that. Now, Where did I want to go next with this? Probably just talking about the software and the move in the soft between software and semis. Let's look at these charts one by one first, right? So here's where we are with software. It has come off the lows quite nicely from what I'm calling the Centrini bottom right here. They came out with that story, that was very old, I thought, in my opinion, about the AI disruptions. And for now, I'm calling it the Centrini bottom. Hence, we've had a nice rally since then. And but now, kind of the heavy lifting has to come here. That's a move back to the 20-day moving average. So I'm not sure what software does here. I would stick to maybe your best names within that group, but there's a little bit of a bounce. And now the real test, I think, will come with the 20-day moving average. So that's what you have for software. I can go through a couple names, but I think some of the best movers in IGV. Let me bring up the right screen here. What did I? Hubs was up decently. Team. I think most of these charts are going to look somewhat the same. Here's Hubs, which they did have a decent earnings report. They are above the 20-day moving average, but again, all of this stuff is going to be in downtrends. If you're a frequent viewer of my videos, you know that I don't like to go after stocks in downtrends. I think stocks need to generally base first, go sideways, and then start to move up. So, but let's see what some of these names do. My favorite in the software group was DOCN, but since it's had earnings, it's been sliding a little bit. So not in that name right now. So the other situation was the semis, and I've talked a lot about how the rest of the group has really outperformed Nvidia. Today, this group got whacked a bit today. um, Notice that the day before on Wednesday, we had the breakout to new highs. So this kind of just puts it back into where it's been for, this is the price where it is, where it closed today is essentially where it closed right at the end of January. So we're talking about a month of overall, net performance about zero. However, there was a nice dip that was bought that you could have bought right after the beginning of the month. And so, yeah, we're still looking at one of the strongest groups, but it just seems like it's a little bit tired, hence getting rejected. Also, I think the relationship between software and semis. So now let's look at the group together. And I'm going to put software in the numerator and SMH in the denominator. I think this just got to a level where it was pretty oversold. It's almost like when you've got this type of a move, and I think it actually looks better to look at this on the weekly chart too. I mean, this is a tremendous move that where semiconductors have outperformed software. Again, I've got software in the numerator, but couple things here. Yeah, so my analogy is like stretching a rubber band more and more and more and more, and eventually, when it gets that far, you let go, and it's going to be a bigger snapback. Hence, you had a decent move. Like if you even just look at this on the 5-minute bar today, you're going to see like the first hour of the day, software versus semis. Like that's that snap of the rubber band coming back. Big outperformance just for the day for now. I don't know if the trend changes here. Again, maybe I would watch the 20-day moving average. Also, when you look at the weekly chart and just putting this in perspective, I think the RSI got to about a 10. Now, generally, when you look at some of these RSIs, just because something gets overbought or oversold, it doesn't mean it's necessarily a signal to either go long or short. But when you get to like almost a single digits, you know that usually something it's going to that's just a little bit too much to maintain in terms of that relationship really getting, in this case, oversold if you're looking at it from the software space. All right, so no change there, but clearly, a lot of volume taking place this week. Speaking of a lot of volume, look at what happened today and also, take a look at this. This is the South Korea ETF. It's almost a 90 RSI. So this thing is due for a pullback. Look at the volume today in the South Korea ETF today. That could be the biggest volume ever. Maybe here you had more volume. I don't know why there was so much volume then, but regardless, it's a good deal of volume that you see there in EWY, the South Korea ETF. Again, that was up about 3% overnight. So it actually was saw some profit taking, but yes, this is extended and probably due for some consolidation. I'm not saying that the trend move that back. I'm not saying that the trend changes there, but it's due for some digestion. Hence, I talked a little bit about, I exited a couple names this week where I thought were getting overbought. Light and most of the other optical names um, got a bit extended. I talked about how I didn't like that candle. It's one thing, like if it's an earnings report and a name's been consolidating a little bit, it can jump outside of the 5 day moving average like that. But typically, when you have a big move like this, and then you see a big separation gap up above the 5 day moving average, it usually means it's overbought and probably coming back in at some point. Hence, today the stock was down 6.4%, which was nice. I didn't catch the absolute high yesterday in light. I sold at 725, but still, I think I did the right thing. And if you go across this group, I think all of them, again, they've moved there. This has been the strongest area of the market. And I think now they're due for some cooling off. That's Corning and Sienna. Sienna came back from the lows. So even though it's still resilient, I would say for me, I'm going to be monitoring because I want to get back into light, but I also want to get back into it, and maybe a little bit lower of a price. So we'll see. SanDisk, I thought was showed some nice relative strength today, considering that the semis were SMH was down almost 4% for the day. The stock was up 3%. So again, my thoughts on this one, because I sold out of this earlier in the week. I think that this possibly can go higher, maybe possibly even to 1,000. But again, I don't have a crystal ball. I would watch the 20-day moving average. It seems like every time it's gotten to the 20-day moving average for now, it's bounced off that. A couple of times that it's done it. We could also look at this in terms of the 1 hour chart too, and you could see that it's gotten to the top of the value area for the week a couple of times. This today was a little bit deeper, but it's managed to bounce. Now it's not over the highs of the middle of the week, so that's why it's okay if this thing digests a little bit. But yeah, so I did not review the indices. Let's go ahead and do that. But there's a chart that I showed over this weekend for members. I don't think I put it out over the weekend, but just shows like not only is SPY in a range, but it's also the VIX is in a range, and the VIX this month, through this sideways month that we've had on our hands, the VIX has not been able to get above really like 2250. It's touched there, I think maybe even closer to 23, but it doesn't end up closing there. On the flip side, every time that this VIX gets down to around 17 and 50, volatility bounces. So I think I did go over this in a video earlier this week. I don't like to chart the VIX, but just to understand that there's levels here, that when it looks like volatility is coming in, it begins to shoot back up. Hence, this is what this market's been all about. It's basically, if you're buying the dip, the lower end of the range, it's working. If you're going after strength over the last month, you're not doing so well, because there's not a lot of follow through after you get a day of strength. You're just not really seeing it too much. You had one here, there, and then we come right back down. Right? It's kind of like shoots and ladders a little bit with this month. Now, does this mean that this market could be starting to break down? I think it's too soon to tell that. And again, I would watch the price action. Also, you could look for some divergences. I don't really see any major divergences yet, but I think that's something that we'll have to keep an eye on. For now, price is the best thing. Right? Watch this lower end of the range. Also, note too, one thing that's a little bit concerning to me. We've got one more day of the month, and then we have a new value area. You could kind of see that new value area. I hope you can on the screen. Notice how it's a little bit lower than this month's, right? It's a little bit of a cause for concern. Take a look at all these months, right? If we go back to even last year, right? Rising, rising, rising. Just I'm looking at the value area from one month to the next. Rising, rising, rising. Then all of a sudden, we had a month in here where this did not rise. The value area did not rise anymore, right? And then we actually broke down, right? And you could see that the value areas were lower for 3 months. Then notice what happened since, roughly a year ago. Every value area has been higher, 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 higher. And then all of a sudden, look at this, right? We've got a value area that looks to be a little bit lower than the previous month. So to me, that means something might be changing, and we'll have to see how this month goes. But yeah, this is the last one that you've had. I'm trying to go see if I can find you another example. I don't have one where we really broke down. So I think it's very important to look at that value area to see that there might be a turn here. Like the momentum is do I want to use the word deteriorating? Might be. So a little bit of a deterioration there. Now, again, that could be something to just say, okay, that gets me a little bit more cautious. Really, it's the price action that's going to actually be the nail in the coffin, right? And that would be the break above below the value area for the month if that were to happen again. And then I think we might be going down and visiting this VPOC down here. All right, that's a little bit of some thoughts again, and how you can kind of use the value area. Let's look at this for Qs as well and see if we spot anything differently here. But also notice the Qs got rejected at the top of at the bottom of the February value area. So let's go back and let's look for a minute. um, so going back, I don't know if you're going to get as clear as a signal. This is going back to. We'll go back quite a bit here. What year is this? 2023. So 2023, value area lower, value area sideways, value area lower. We kind of spent a couple months going down. And then instead of, we did break lower here to start the month, but we climbed right back. And then you see all these value areas higher, 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 higher. This one is still higher than the previous. Higher, higher, lower, and we kind of came in a little bit here. This wasn't too much of a problem. We worked through that this one month, and then an inside value area, and then we made higher, higher. So really not, maybe this was a little bit of a signal. This one was a little bit lower. It's a little bit toppy. So that's what kind of concern. So we keep going, and we're going to have a value area that is lower. So well, again, that could be a signal that momentum is deteriorating, and so I think that's going to be very interesting as we enter the new month of March. Remember, some of these things you don't have to play guess. What should I do? Some of these the first day of the month sometimes will give you the signal of what is going on in terms of rotation. I go back to the first trading day of this year, and I was on vacation, or I was skiing, and I was in Lake Placid, but I was still trading, and I noticed like what things right in the first, like there was no confusion for the first trading day of the month. They went out and they bought software. They went out and bought semis, and they bought software. And that's pretty much how this year has gone in terms of performance. If you don't believe me, like, here's the first trading day of this year. They went right out and started buying semis like crazy. Right. And here was software. Here's the first trading day of the month of this year. Software got hit immediately. Right. That gave you a really good signal. I picked up on that. I communicated that to Tribeca Trade Group traders, and I know I made reference to it as well. Right. That was your warning signal. So if there was a Centrini report that came out on the first trading day of the month of January, I would have been all about it. Here, coming out with a report that's saying AI is going to be hurting things after a with sorry folks, you have to laugh at some of these things. If you can't laugh at some of these things that happen in the market, looking at charts and price action all day is boring. Some of the stuff you kind of have to laugh at to kind of give you some comic relief. So after software is down about 23 20, about 25% year to date. Now you're going to come out with a report that you're concerned. Okay. So in any event, the point that I'm trying to make here is watch what happens on that first trading day of the month of March. You might get some good signals where you don't have to go out and make a whole bunch of predictions. Following the price action, and really that, being observant, being a little bit clever helps more than anything else in this market, than, in my opinion, than trying to go out on a limb and come up with ideas. Because that first trading day of the month, where the semiconductors went like this and software went like that, was the whole trend so far for this year. All right, a couple other things that I want to discuss that I thought were interesting for the day. I went long the DVY ETF today. Why did I do that? Well, because I wanted to get a little bit more conservative now that we've seen some things bounce from the lows, and we had a good day yesterday, but of course, no follow through. So I would say that let's see if this wants to begin to pick up. Right, dividend stocks have been hot this year, and I think that trend may continue. Another ETF that I'm looking at as well is AMLP. This is the MLP ETF. So there's a lot of energy names in this one. I thought that was pretty interesting. Also, the precious metals. Here's what gold looks like. That's a crazy looking candle for gold today. It maintains above the value area. Also, take a look at GDX. Right, you had nice bullish engulfing. That's a new closing high for GDX, by the way. Just like that, the gold miners are back at 52-week new highs. The silver miners, also look at the candle there. That's a new closing high for silver, for the silver miners today. Not for silver, but for the silver miners, acting really well. Bullish engulfing, and if you look at, I think the strongest one in the space is AG. Beautiful engulfing candle for that one. And HL looks like it's starting to move too, but also bullish engulfing there. Even though the metals are not doing as well, the miners are doing extremely well right now. I'm still long some XME. It went lower today, but it didn't take me out of my stop and staying